Ouch. Stocks had a really big pump and then a really big dump. So, what exactly did Jerome Powell have to say today? Because we are finishing almost exactly where we started, right around 5,000 SPX or about 500 on SPY. That's exactly what we're going to talk about today. It's become increasingly evident that only the last 10 minutes matter. And that is when a third of all trading happens. Okay, so what did we get? Well, we got a massive whipsaw. A whipsaw means that we get a sudden move in price or a knee-jerk reaction. Well, this really matters because we were trying to stop going down, and unfortunately, if we look a little bit closer, we fell right back down below our downtrend, which means this is no good. If we now look at a 10-minute chart, there's the last 10 minutes from 503 all the way down to 500, or basically going from green to red on the day. The last 10 minutes really matter. I just showed you that. So was that all it really was today? Was it really just the last 10 minutes? Or is there more at play? I think there's more at play. We've been talking a lot about how weakness now isn't abnormal. After a strong start to an election year, man, we can go down more, and go down more, potentially for 3 months. We talked about that in depth on the weekend. I'll leave you a link for that at the end of this video. So Jerome Powell, what did he say? Because that's what really matters. Traders were expecting the biggest Fed day move in the S&P since 2023. Okay, market was bloody red in the last 30 days going into today. What was the net effect? Hey, still pretty red, but it looks like mostly earnings. So the market moved, some rotation happened. But what did Jerome Powell say? Fed seeks more signs that inflation pace will slow. Fed holds rate steady, citing lack of inflation progress. Central bank to slow balance sheet runoff starting in June. This is dovish, by the way, or bullish for stocks. Powell says rate hike is unlikely to be the Fed's next move. Also bullish. Confidence to rate cuts to take longer than thought. Powell, that's hawkish. Okay, so two hawkish statements, two bullish statements. Looks like a neutral. So does that help explain the reason why the market went a whole bunch of nowhere, up, down, starting where we finished? Maybe. But there's more at play because what the US says impacts the world. Look at this. Oh my goodness. After Jerome Powell finished, we got a huge move in the dollar yen. I don't know what's happening here, but we're going to have to track this tomorrow. What's also really important is what changed in the Fed's new statement. Not a whole lot. The parts that are red and underlined are the new parts. We'll come back and talk about this in a moment. Just stay tuned. Because what I really said is that at the beginning of the week, there's likely going to be a lot of noise. What we care about is price action. And right now, we're not seeing positive price action. We're seeing lower highs and lower lows, which implies more downside. And I also went through in depth what a whipsaw or a knee-jerk reaction would look like today. Hopefully that was helpful. And then finally, those last 10 minutes really matter. Everything looked fine until about 3 o'clock, and then it wasn't. And I'm getting a breaking headline here on the Japanese yen. I'll see if I can pull that up in a second here. But the next thing I want to look at is going to be the Bitcoin versus S&P, because if we now look at the pattern, we've already bounced off the 50 and failed, rejected off the 50. So there's our bounce off the 50 and fail. There's our rejection. It looks like we're about right here right now. So what that would imply is that maybe we go down a little bit more and then maybe we get a sudden drop. I'm not sure if the next parts are going to track perfectly, but hey, it's been pretty accurate until now. I'm trusting this thing. So this is really, really interesting. If we now shift the story over to fear and greed, we made it to 44 today on the doorstep of going back into neutral, but we failed. And we already know, we talked about this, the close of the weekly candle versus the close of the monthly. I'll go through some charts at the very end of the video. What I would really appreciate first is if you could please consider smashing that thumbs up and subscribing to the channel. I would greatly, greatly appreciate that. Thank you for your support ahead of time. All right, so what I want to do now, and sorry for the long one there. I'm trying to get this thing for the BOJ ready here. Give me 1 second because this is also moving based on what Jerome had to say. So it's not just stock traders which are moving, trading based on what Jerome said. It's a lot of people. Let me see if I can pull that up here now. So if the market's going to go down, we're getting more evidence here. All we need to see for us to repeat this is a monthly lower low. So what would that look like? Well, it's basically just coming back down and losing the key relative low we have here. It's not really looking for that much more downside. All right, here's the article. Sorry for the delay. Yen surges 2% in minutes within traders edgy on intervention risk. Move came following the Federal Reserve's latest policy fanback. Okay, there we go, right? That's what moved the market today. And now my mouse is dead. Here we go. Sorry. All right, so we got through a lot of important data, but we're not done. We got Apple earnings tomorrow, and we're expecting a miss. And then we have payroll, unemployment, and average hourly earnings on Friday. I don't really care what the Bank of Canada governor has to say. I care what Jerome said. He speaks again tomorrow twice. Who cares? Initial jobless claims. I'm not sure that's going to move the needle. I think what we're really looking at now is going to be average hourly earnings, non-farm payroll, and the unemployment rate. So less jobs than the last time. Average hourly earnings are still high, and we're sticky here at 3.8. That's the expectation. These numbers will matter on Friday. We also have to note that there's something really interesting. I looked here and we noted that the Q1 print was really soft. It came in, I think, at 1.6, which is quite different from the St. Louis GDP now. But look at Q2, printed today, May 1st. This is looking for 3.27. So concerns about stagflation got walked back. It looks like at least I was wrong on that. Jerome Powell did walk that part back. But with Apple in focus for tomorrow, we'll go back and talk about Powell in a moment. But remember, Apple reports, and we're expecting a miss. So what they say is going to really matter. I'll tell you the reason why. If they don't deliver some AI boost like Amazon, Google, and Microsoft was able to, they turn into Meta, well, that could create the move lower. And then for WWDC coming out at the end of June, that could be a catalyst. I specifically want to hear what they say about OpenAI, because here they say that they need a true low-end iPhone to revive growth, but Apple intensifies talks with OpenAI for iPhone generative AI features, notably AI chatbots and iOS. They still want to do things in-house, though, so I don't want to tell Tim Cook what he's going to say. I want to react to what he says. I really want to hear about AI tomorrow, like Amazon did. Why? Man, otherwise, Apple's probably going to fade. We were expecting bad earnings from Tesla, but if we look at the last week now, well, Tesla's actually not all that terrible. Let's have a look here. Tesla's actually up 10% still, even with all the recent blood. Impressive. Okay, so now let's go back to what actually changed in this Fed rate decision here. Here we go. It's just a few things, and it's the bullets we went through at the top here, basically. So here they talk about blah, blah, blah. In recent months, there has been a lack of further progress towards our committee's 2% inflation objective, right? We have moved towards over the past year. That's pretty much it. The rest is the same. What does that mean? Status quo. We need to see more evidence before we cut. And inflation might be a little bit stickier, like Jerome Powell said. He said growth might be high, unemployment might be low, and inflation might be a little bit stickier. Well, that's what I'm seeing here. It's really hard to read what's happening right now. But let me do my best here to try to illustrate a few more quick things. So if we go here to the S&P, what I really want to focus on is this. Where am I here? Is it this one? No, it's this one here. So it's Bitcoin versus the S&P because, man, we're so close. Bitcoin did blow out the low. So if we're currently here and we're following Bitcoin down, maybe a little bit of a dead cat bounce, and then blow it out. Down, maybe a little bit of a dead cat bounce, blow it out. It doesn't have to take this many days either. I am ready. Again, I don't want this to happen. I hope it doesn't. But hope is not an investment strategy, and that's not what I would be advising you to do if I was in your position. All right, so what can we look at next? Because there's a lot of things we can go through, but I don't want to distract from the noise. We have our dip recipe, and until we minimum reclaim number 4, there's no rally. We're not above the short-term price. That's the same thing that Bitcoin just did, and I showed you. Reject on the 50, reject on the 50. Did not even test them. There's no test of the blue line. Here we got close, but it's no cigar. So what does that mean? It means the daily chart's still soft. The weekly chart, we have a bearish reversal. And if we look now, we got a fail breakout. There's fail in the word. Yes, we have higher lows. That's the last part missing if we're going to repeat that Bitcoin versus S&P move. We just take the low out. And that would confirm we're going into that corrective wave into the summer, in my opinion. Again, it's just an opinion. I'm not Nostradamus. I don't know everything. But as I look here a little bit objectively, again, we talked about how it took multiple candles before we got a bearish reversal. In this case here, it took three lower highs, 3 lower lows. What are we doing on the monthly chart now that the month of May is open? Look at the high. Look where we got to. There's a few interesting things here. Why? Well, because we're already red. Note the lower high and lower low. Lower high, right? We get the lower low. Let me see if I can lock the tool here. Lower high, lower low. And right now we're about to lose that low. It's awfully close. Remember, on the weekly chart, we started off with 1 lower high, 1 lower low. Then we went for 3 in a row. Then the market went down. So I want to really pay attention to this monthly pattern because if it happens, we're going to have to wait until what? 1 month, 2 month, 3 month. We just showed you on the weekly, it took 3 weeks here. So when does that get us to? April, May, June. All right, that's 3, right? Oh, hold on. April, May, June. That's 3. Yes, that's 3. So if we can count to 3, we should know what's happening here. But secondly, let me show you something else. Look at the high of the day today. It's 508.19. Why does that matter? I'll show you. Because I was watching this level so close. I was watching 504.91. But look at where we closed the week out. 508.26. So we got within roughly 10 cents of testing the weekly close, and we rejected. We got a stomp. And if now, in hindsight, we lose this low, what it looks like to me is that we're forming the potential, keyword here being potential, for a monthly head and shoulders. Looks like a reject off the key low and a reject off the key high. We have 510.13, made it to 508.19. We couldn't make it to 510. All we got it to was the weekly low here. All right, there's a video queued up on the left. If not, come hang out with me at 9:15 and 9:30 tomorrow. Thanks so much. I'll see you tomorrow.